Webull stock just took a hit, dropping more than 11% on Monday after a red-hot week where it gained over 27%. On the surface, that kind of dip might spook some investors, but I actually see it as part of a much bigger, and still bullish, story. So, let's unpack what happened, what's behind the move, and why a growing number of people believe this stock could be headed toward $20, $30, or even $50 in the medium term. First, the facts. Webull closed Monday at $12.72, down more than $1 from the previous trading session. The pullback came just days after the company announced a $1 billion standby equity purchase agreement with Yorkville Advisors. Now, for those who aren't familiar with how these deals work, it basically means Webull can raise up to $1 billion in capital by issuing shares over the next 3 years, whenever it chooses. It's not an upfront raise and doesn't automatically dilute shareholders overnight. But it does mean dilution is a possibility over time, and that's likely what triggered the sell-off. But let's not miss the forest for the trees. This deal gives Webull massive financial flexibility. $1 billion is serious dry powder, money that can be used to fund global expansion, invest in technology, scale its user base, or even make strategic acquisitions. That's not a bad position to be in, especially for a fintech company that just reported 32% year-over-year revenue growth and swung from a loss to a $12.9 million net income. Customer assets have grown to $12.6 billion, and registered users now top 24 million. Those aren't just vanity metrics, they're signals of a business that's scaling fast and doing it in a sustainable way. And that's exactly why the $1 billion equity line isn't necessarily bad news. If Webull executes well, they can use that capital to grow faster than they dilute, which actually benefits long-term shareholders. Now, let's talk about the elephant in the room, crypto. Webull recently re-entered the crypto space, launching trading services in Brazil through a partnership with Coinbase. This is a strategic move, not a hype play. Brazil is one of the fastest-growing crypto markets in the world, and Coinbase brings the infrastructure and trust. Webull, on the other hand, brings a clean, simple interface and an established user base. This partnership signals something more important, the normalization of crypto within mainstream finance. Webull isn't turning into a meme coin casino. They're folding crypto into a broader suite of financial services, just like they've done with stocks, ETFs, and options. It's a smart play that positions them as a modern, flexible investing platform, not just for the US, but globally. Now here's where it gets interesting. A growing number of investors, and I've seen this in the comments too, believe that Webull could be a $20 to $50 stock in the medium term. That's a big leap from where it is now, but let's break it down. First, on valuation alone, if Webull keeps growing revenue at over 30% annually and stays profitable, the market will likely re-rate it higher. We've seen this before with companies like Sophie and Robinhood when sentiment shifts. And remember, Webull is already profitable. That sets them apart from a lot of fintech players who are still in the red. Second, the $1 billion equity deal, if used wisely, could be a springboard for scaling their user base, expanding internationally, and beefing up product offerings, including crypto, margin, research tools, and more. This is about building a real platform that investors stick with. Third, the broader macro backdrop is shifting. Retail investors are coming back into the market. Crypto sentiment is warming up again. And people are looking for platforms that offer more than just meme stocks or Bitcoin trading. Webull sits in that sweet spot, traditional enough to be trusted, modern enough to offer growth products, and lean enough to pivot fast. If they continue executing well, especially with international expansion and crypto integration, the upside is real. A $20 share price would imply a more ambitious but believable market cap. A $50 price tag might sound aggressive, but not impossible over a longer horizon if Webull becomes a dominant retail investing platform across multiple continents. Of course, it's not all guaranteed. Execution matters. If they over-dilute, lose focus, or get caught in regulatory issues, the story changes. But right now, based on fundamentals, financial flexibility, and strategic positioning, this stock still looks strong to me. So yes, Monday's dip might have been driven by fears of dilution. But to me, this is more of a pause than a reversal. Webull has options, it has growth, and most importantly, it has vision. Let me know in the comments, do you think $20 to $50 is a realistic price target? Or is this just a post-earnings hype wave that'll settle back down? Thanks for watching, and if you found this helpful, hit the like button and subscribe for more updates.